Business of Property podcast. I'm Simon.
I'm Stuart.
We're both property people running our own businesses. This podcast is just us chatting, as we often do, about anything and everything property. Last week, we talked a bit about what we might get out of property and what we particularly were trying to get out of property and when we got started, and a little bit of what we look for now. And this week, I think we're going to look a little bit about what we put into our property processes and our property businesses. This is a bit of sort of time and knowledge and experience, but also the money and the capital side of things, and perhaps utilising other people's money or experience or time. So using external investors or having built a team that can provide experience and effort into the processes that we then employ in our property businesses. I think, first of all, let's put you on the spot, Stuart. Seeing as I did the intro, I get the chance to do this, thankfully.
Damn.
What do you think is your balance between all of those different factors that I just mentioned that you put into your business? And I wonder if it might be worth looking at this from sort of two time points. One, when you first got started, and another one sort of now-ish.
Yeah, well, it's funny because, well, it's not funny because obviously as we think about and we talk about this, I was thinking about the property investment cycle. And for me, it's been quite linear. So when I think about how I've gone into property, and back at the beginning, so we owned an investment property that my wife used to own, as many of us do. We were the accidental landlords. We owned two properties. We moved in together, and then we therefore had a rental property. Before I started investing, I think I was concerned about what was involved, not just in terms of, and this aligns with what we're talking about, in terms of how much time it was going to take me and what the real costs were going to be. So my first toe in the water, if you like, was a very small flat, was my first true, what I would call investment purchase, which we still have at the moment. And that required very little time from me because it was already a refurbished property. It just happened that the owner needed to get rid of it quite quickly, which meant we could negotiate quite well on price. But it required very little input from me. I went to view it once, was happy with it, bought it, got someone in. That was back then, nearly 5 years. Well, yeah, it was 5 years ago. Versus now, we look at 13 beds, double freeholds. We've been looking at commercial properties with potentially up to 15 beds, but converting them. So there's been to your point, there's been quite a journey in the last 5 years to get from buying a single one-bed flat to looking at commercial premises that we would have to fully refurbish and rip out and so on.
So would I be right in suggesting that over that time, the sort of changes to your input have mostly been knowledge and team? Are you perhaps putting in a little bit more of your own time as well? Or how do you think the scales have moved?
Definitely requires more of my time. And I think more knowledge too. Obviously, the knowledge grows. You and I have talked about this before, and I'm definitely of the camp where I think the best knowledge comes through doing, yet we want to mitigate as much of the risk. We want to minimize as many of the problems that could happen through knowledge. And I think that's what makes a lot of us nervous in and around property, particularly when we're new. And certainly, speaking from my own experiences, and I think this is why property courses and property training does so well, because, well, we think I must be missing out on the magic ingredient that means I can generate £1 million tomorrow. And number two is I really don't want to make a mistake that's going to cost me money or mean that I buy a property in the wrong area. Because that's probably, if I think about my fears, is when I was starting out and a lot of people, and I've received messages, several messages around location. And I think a lot of people get nervous around, am I going to buy this in the right location? And I know I'm probably stepping over into our other topics. I won't go too far into that yet. But I think that experience for me comes from doing. And doing means walking the streets. It means looking at the properties, getting to know the area, and then biting the bullet and buying that property. I'm fortunate that the first flat I bought, if I had the option again, I would buy it again. But I did actually start going through a conveyancing process of one property, one small, very small flat, which I pulled out of in the end. And I look back on that and I think that was just fortuitous. I mean, I was basing it on very little knowledge, but if I could go back in time and have that offer again, I'd definitely pull out again for a number of reasons. So I think just topics we're talking about today, that experience will only come through doing. And before we do, then I guess we need to work with others and speak with others to get that knowledge. But back to the point, my time has increased because I do more research on the properties that we're going to buy, because we are looking at how we develop them. So before I was just looking at almost oven ready. That's the phrase of the day. And I know you love that one. Okay. Out of the box.
This is not a video cast, so people cannot see my
disgust.
Yeah, my expression, holding my head in my hands. But yes, anyway.
Let's say ready-made. So before at the start, I would have gone ready-made. Now I'm very happy to buy as unready-made as possible because we look at the work. So that requires probably more time at the front end, less time middle end. But we do have a really, really good team now in terms of building team. So they know what they're doing. We've obviously done a few projects together. So there's small things where they now understand what we want. So that has limited. In terms of money, that has increased because the projects we're doing are getting bigger and bigger, not necessarily in terms of property type, but just in terms of what we're doing to those property, although we are looking at bigger properties. So I guess they're probably the key things, time, cost and money. And that has changed over time, but that's because that's what I've chosen to do.
So as you might expect, really, over 5 years, your property business has grown and developed and improved. So I think you'd be on the wrong podcast, really, if your answer to that was no, we haven't really gained any knowledge and no steam at all. So yeah, I think you said what we would hope would be said, and it's all being positive and all going in the right direction. So I think that all sounds really good. Something that, from my point of view, something I haven't really done in the same way as you have is I haven't built a property business per se around that. I've built much more of a property portfolio, perhaps, but might be another term for it. I started relatively simply in terms of I started with buying my own home, slightly bigger than I needed, and renting out to lodgers after I'd done some renovations on it. But after that point, I've very much stayed in the simple end of the camp. So I've gradually built my own wealth and put that investment money back into future properties. But my time investment has stayed relatively low. My knowledge and experience has definitely grown over the years. I've been through some very educational periods with properties and with tenants particularly. But I haven't built out very much of a team, certainly not a consistent team. So there are people that I use and reuse. So for example, plumbers, gas engineers. I have a couple of specific people in different areas where properties are that I will keep returning to and keep using for those. But in terms of sort of refurbishments, I do those projects so rarely at the moment that I don't have a specific team that I've built out on that. I have to go and sort of assemble an appropriate collection of people to do those projects each time I need them. So we've definitely taken different approaches there. And my inputs to new investments now are very similar, actually, I think, apart from the knowledge and experience. So I still expect to put in the capital, and I still try to put in relatively minimal time, although there's definitely some, especially since I do take on the management of the properties as well as obviously sort of the purchase and initial setup process. I don't. I say I don't use agents, but that's not 100% true. I do in some places and some cases use introduction agents for rentals, and for some of my properties that are closer to my parents rather than me, they act as my agents for managing those properties. But going forwards, the properties I'm planning to purchase and invest in the near future will be ones close to me, and they'll be ones that I fully self-manage. So in that respect, I will be putting in a bit more time.
Do you use agents to market the property?
Historically, it's been a mix. I don't take it sort of fully personally. I don't go and post it on Gumtree or Facebook or whatever else. The sort of completely free platforms, or very, very nearly free platforms, that you can, as an individual, start marketing property. However, I have used services like OpenRent and LettingAProperty and UPad, although I think they've gone out of business now. But they're a whole handful of similar services where you create the rental property listing yourself, and you get the photos done yourself, or buy them from them through a professional photographer or whatever, and they just do the technology part of putting that listing on to Rightmove and Zoopla and wherever else they might put it. And most of those then also sort of triage responses back from inquiries. So the phone calls and the emails and things go through them first, just as a sort of first check to make sure there's actually a real person there and that kind of thing. And then from that point on, I would pick up the process, talk to the prospective tenant, and potentially arrange a viewing and that sort of thing. So quite how that balance could or will work in current COVID times, and indeed the near future COVID times, I'm not sure. And I may choose to be slightly less involved in the near future, but we'll see. I haven't quite decided on that yet.
Yeah. I don't want to go too deep into it for this topic, but we've used on 2 occasions now Visum. Have you heard of Visum? Visum?
Only through you.
Yeah. And that's really good. And essentially you do everything, but for very low cost. And I think it's very good if you've got a property which you know is going to gain quite a lot of interest. But we digress.
Yeah, I think I can't remember what I did look up the pricing for them, but I think if you're wanting to go sort of really budget, I think OpenRent is probably the cheapest I've seen for just getting your property onto the portals. I think that starts at 30 or 40 quid, something in that range, as opposed to some of the more expensive ones, which are sort of 100 quid-ish. But obviously the actual level of service you get from them varies as well.
Mm.
It's not always a simple cost that you can look at.
No. The other thing I'm just going to ask you, just when you talk about your experience, because just from a listener perspective, I can hear the question. You talk about just buying properties for yourself, and that's kind of stayed the same. Do you buy personal or limited company?
So all of my properties currently are personal, and as I'm currently looking to purchase again in the near future, this is a topic I have been revisiting, and I'm currently erring towards personal again, at least for the next one. However, I'm not 100% certain. I wonder if, let's dig into it now. Why not? So I know, Stuart, that you invest through a limited company. So I'm assuming you will have some alternative views to this. My thinking is using a limited company has lots of extra little costs, and I don't necessarily mean monetary costs. I also mean sort of effort and hassle costs. So let me run through some of the ones I'm aware of. On the money side, mortgages tend to be more expensive. Solicitor fees tend to be more expensive. In terms of maintaining a company, the accounting process is a bit more expensive. You generally need an accountant, whereas personal ones you can probably get away with doing yourself. You also have things like company returns and things like that you have to pay and maintain. Then getting on to sort of some of the hassle things, there are fewer mortgage options out there, although that's improving, I believe. But I think there are still fewer mortgage options, so you might have more hassle, more hoops to jump through there. And the actual processes around that. So quite often, a mortgage company offering you a mortgage for a limited company will also ask for a personal guarantee. So, I mean, if I'm taking out a mortgage personally, then obviously it's a personal guarantee. That's expected. But if you're doing it through a company, you go through the process with the company, but then you also go through the process of the personal guarantee, which often involves an extra solicitor, I believe, and extra cost and effort there. And I think there are just a number of little gotchas along the way and extra bits and pieces that I just fancy avoiding, really. So what do you think, Stuart? Am I making the right decision? Should I go for a limited company?
Well, if anyone says that question, I can only say, well, only you know what's right for you. You don't lay it on me.
We should probably also mention very specifically, don't rely on anything we say. We're not professionals in this area. Always seek independent advice if you are uncertain. But anyway, so should I use a limited company, Stuart?
Well, it sounds like you know your reasons why you wouldn't. So I think.
But what are the reasons why I would? So, or tell me, what are the reasons why you do?
Well, the big one is, of course, the Section 24, the removal of the interest rate relief from personal mortgages, so we can no longer take off the mortgage interest as an expense, which I just find I still to this day can't understand how a government has decided that is not a cost to the business. But let's not get into that. We've already sailed far away from where we originally planned to talk about. So for me, that was the big one. I think there's also, and I couldn't talk about it with any depth here and now, but in terms of what I want to do with the properties in the future. So if I wanted to sell the portfolio, for example, I only have to think about the company. I don't have to think about each property individually. So I would just sell Lord Pounder Property Limited as a business, which itself will hold X amount of assets and will generate X amount of cash flow. And that's kind of my key thinking. So the key things there are really just that interest rate relief. And by the way, you're right on all the things you've said. You're right. I mean, for me, it's been minimal effort. It is a ball ache to do a PG, a personal guarantee every time. That needs to be done. Not everyone has asked for it, but 99% of them do. Equally, in the property as well, we get more flexibility around shares. So sorting that out in terms of who gets what. Obviously, I just make sure I own all the shares so my wife gets nothing. No, obviously not. But again, thinking about legacy, how it could play out to kids if we went down that route. So you're right around cost. I think for us, for me personally, I've never done my own books for myself anyway. So to get an accountant to do it for the limited company to me is just the next step. So that's been absolutely fine. What was the other thing? But in terms of setup, it's minimal, but there are, as you say, there are sort of ongoing costs that incrementally add to the expenses.
I think one of my sort of considerations towards perhaps taking the limited company approach was actually just to gain some experience with it, to see if what the differences are and what the extra processes are. But I'm not sure. Currently I am thinking that while it would be interesting, it is perhaps not worth the hassle.
Well, it all depends. And I hate to say this because it's a standard cliche, isn't it? But it depends on every individual's personal circumstance, tax circumstance, what other work you're doing, what tax band you're in. For us, like for me now, with the company overall, we'll have a close to 50 rooms. So it's obviously it's not insignificant revenues now. So for me, it is a business. The interesting point for me was around understanding why the government pushed us down this route, and it wasn't just for the interest rate relief, it was so that they could capture more of the revenue properly, because a lot of people, let's just say when you move, you conjoin as partners and you leave you leave a home behind and turn that into a rent. Not everyone immediately turns that into a rental property, because we don't think of it and so on. So I think the professionalization of being a landlord, I think, is a good thing. And the reason I think they like and being limited companies is because you do have to do your accounts on an annual basis after your first year or so. So it pushes people to do that properly, which means that the government can collect what's rightly theirs, versus personal. It's very difficult for them to manage. And hopefully those that are getting limited companies are the people that are thinking about doing this more seriously anyway. So I think there's also that, I want to say, immaterial reasons for doing that as well, not just finance, but also for saying, actually, this is a business. But again, that's depending on someone's scale. If you only got one or two properties, my view would be, do you really want to go? And in fact, I think I have said that to someone when they said, "Oh, should I go limited company?" I said, "Well, what are you thinking of doing?" They said, "Well, I just want to buy one property or two properties." And I said, "Well, number one, speak to your accountant, because he or she will know what you should do for the best. But number two," and I would probably almost repeat what you said, I just said, look, it is a lot of effort if you're only going to do one or two properties. If you're going to scale up, then I would seriously consider it, because you've got corporation tax versus X, Y, and Z. And for me, that has proved beneficial. And keeping it in the business has proved beneficial. We've definitely, let's say, saved money. We haven't made money, but we've certainly not put as much into taxes as we probably would have, as we definitely would have done if they were all in personal names.
Yeah, I think, I don't want to get too into the tax thing because we're not tax experts. But that said, I'm going to talk about tax. I think, just on a very high level, if you own properties personally, you have this bizarre Section 24 thing where some of your, so some of your expenses aren't actually considered expenses, and hence increase your taxable profit, even though your actual cash profit is not increased. But anyway,
ridiculous. Yes,
indeed. Once you get past that, you're then taxed at your personal tax level, whether that's 20, 40 or 45%. I think they're the bands at the moment. And that's relatively straightforward. If you've got property in a company, you're currently paying corporation tax, which is 19%, I think, currently.
Yeah.
It changes for different size companies, actually, but probably that. However, that's great for profit that the company makes and stays in the company. But if you then want to get any of that profit out of the company, you'll have to pay yourself a salary or dividends, both of which then get hit by personal tax.
Well, after your minimum amounts and your dividends.
Yeah. You get your personal allowances, yes. So you get relatively small amounts for free without tax. But then after that, you then get hit for those tax bands. So then you're paying 19% corporation tax, and you're paying your personal tax levels. Of course, the actual money that comes out is a little bit less because you've already paid the corporation tax. So you might not hit the higher bands as much, and you've got the personal allowances, which balance off against this a bit. So the calculations are really not simple, but it's not necessarily obvious that you can just say corporation tax 19%, personal tax 40% or something.
Oh, no, definitely not. Yeah.
No. And also it depends what you're aiming for, because if you're trying to live off your property income, you've got to extract that money from the company. But if this is a side business, you're living off a day job, and your property business is just intended to sit there and grow for your pension in 50 years or something, then you might never need to take money out of that company, at least not in the short term. And hence, that second bit of tax, or the personal tax, you might just not pay. And then you'd only have the 19% corporation tax. And then, to further confuse things, we've got capital gains tax. So in a personal world, that's, what are the two bands, 18 and 28% on property? Is that?
Sounds about right, yeah.
Don't know. Don't quote me. But anyway, it's a good job no one's listening. So you've got that on personal tax, but then in a company, again, there is no there is no capital gains tax. It's all corporation tax. So then it's just 19% as opposed to potentially the 28%. However, again, in the personal land, you get personal allowances. So you get a chunk tax free each year. And in the corporation, you don't. It's all taxed. So again, you've got complications balancing out between those. And to try and work out which is actually better. And that's before you even get into the idea of the company needing money in the first place to actually buy the property. So then if you put cash in, you've probably done that as a director's loan. So then you might be able to take that money out without paying tax, at least until that money has all come out. And then there's also, if you've already got property and you're considering transferring it into a company, that's another whole host of complications, and almost certainly involves capital gains tax on the personal side and then stamp duty on the company side for purchasing the property. Oh my goodness, I've got to stop talking.
I think, I think there's lots of complications to it, and my gut feeling is that most people would probably not benefit from putting it into a limited company, depending on their rationales. The other thing that I just wanted to pick up with was you talked about transferring. So I have looked at that because we've got several properties in a limited company and we've got a few properties in personal names. So really, just because the way my brain works, I just wanted to simplify what we had and just put it all into one element, really. So I did look at this to some degree. And the other thing I think we all need to remember is that every profession, whether it's ourselves, whether it's solicitors, whether it's accountants, whether it's estate agents, whoever's in that chain, there is always going to be an inherent bias, whether it's known or not, to generate business for oneself. And what I mean by this is that when we speak with tax experts or accountants, they're not going to want to turn work down if it's significant. And I've looked at the transference of personal assets into the limited company. And again, I have a lot of faith in the tax accountancy people that I've worked with. Some of them are brilliant people in terms of highlighting things to my business. But on this occasion, although it looked like a good idea and the proposal was, yep, we can do this, it's absolutely fine, it's only going to take 2 years. When push came to shove and I put all the numbers in my little spreadsheet, what I realized was that by the time I'd paid for the fees for accountants to and the tax specialists to make it happen, the savings I would have made would have brought me out at a net potential net plus £2,000. And this would have been for about 2 years' work, no doubt a crap load of paperwork. And I just thought, you know what, for £2,000, I think we'll park it and we'll move on, and I'll just leave them in personal names. So I think everyone has to look at each situation on its own merits and for your own personal bias. For me, I've just explained why limited companies is good for us, and we still want to grow, and I want to have that company. But that doesn't mean it's the right size for everybody. There's not a one size fits all solution.
Yeah, I think that's very, very true. There are just so many factors to consider. It's a minefield, and even if you seek professional advice, as you say, it's not always unbiased, and it's something you have to sit down and try to get through yourself, I think, to really make your own decision ultimately.
Yeah. And I want to go at pains to say that's not me I'm not denigrating any of the professions, because hand on heart, some of the accountancy tax advice I've received in the last 6 months has given me not only significant savings, but put money back into my bank account. So, the proper true specialists are worth their weight in gold. The point is, you still have to look at each situation on its own merits for you personally, because someone else may have looked at it and said, I will still progress and put these into limited companies, because even though it's only a net £2,000, which, to be honest, is negligible if we look at it over 2 years, it still might have been the right thing. However, for me, the upfront accountancy fees or tax fees to do that just just aren't right for right now. So it's just to put that on it, really. Just make sure you look at it for yourself if you're going down that road.
Yeah, exactly. And on that particular point as well of the transferring properties to companies, there can be some very large early expenses in the process. So, for example, you might have to pay taxes quite early on in that process before you've realised any of the savings later on. So, there are definitely lots of factors to consider. And I still haven't 100% decided whether I'm going to purchase my next property in personal names or in a limited company. But yeah, I think I am still erring towards personal. But we shall see. I shall update everyone.
Yeah. Well, obviously you'll speak with your friendly accountant and maths the out of it.
I'd stop listening just for a moment to cough there, but I think you've made me go and get out the bleep button again, haven't you? Oh dear. Right. Well, we are past time, despite the fact that we haven't covered several of the things we were planning to talk about in this episode. I'm sorry, I distracted us talking about tax, which is never a good idea. But anyway, So thank you very much for listening. And please do get in touch if you have any questions that have cropped up during what Stuart and I have been talking about. If there's something that we've covered and you'd like to expose a different angle on, or if there's something we specifically haven't covered that you'd like us to chat about, please do get in touch. You can do that through the website, which is also where you'll find the show notes, and that is at thebusinessofproperty.com. And we will talk to you again next week.